Hello everyone, welcome to the Crypto Compass. Today we are talking about a big idea, but it is also a very practical one. Generational wealth and Bitcoin. This is about building something that lasts, something you can pass to your children and grandchildren, and why Bitcoin may matter on that journey. And yes, we will talk about crypto investment, but we will talk about it the disciplined way. First, a clean and honest disclaimer. This is educational content, not financial advice. You must do your own research, make your own decisions, and if you need personalized guidance, speak with a licensed professional. I am not here to throw out tips or hype. I am here to give you a compass, a real framework, so you do not get lost. Now, when people hear the phrase generational wealth, they often think it is only about a big house, a company, or a huge bank account. Those can help, sure. But the real foundation is a system. How you think, how you behave, and whether your money can hold purchasing power over time. If you can earn money but cannot keep its value, you are running hard on a treadmill. That is why smart crypto investment starts with understanding what quietly erodes families over years. That hidden enemy is inflation. It is not dramatic. It does not knock on your door. It shows up in the grocery bill, the rent, the school fees, the price of everything. Inflation is like an invisible tax on workers and savers. You can do everything right, work hard, save steadily, and still discover that the same amount of money buys less and less. This is not about being lazy or foolish. It is about the rules of modern money. And this is where Bitcoin enters the conversation. Bitcoin is not magic. It is not a shortcut to being rich overnight. Anyone promising that is selling you a trap. But Bitcoin introduces a powerful idea, a scarce digital asset with transparent issuance rules, not controlled by a single person, company, or country. You can like it or hate it, but you cannot ignore how different this is. Scarcity matters because what is truly scarce and hard to fake tends to preserve value better than what can be created endlessly. That is a core reason many people study crypto investment through the lens of Bitcoin. But do not get carried away. The right response is not, buy everything now. No, the person who wants generational wealth does not play roulette. They ask, what are the risks and how do I manage them? Because if you want to pass wealth forward, rule number one is simple, do not lose it. Crypto markets can punish a lack of discipline faster and harder than almost anywhere else. Here is a line I want you to remember. In crypto, what destroys you is not volatility. It is your reaction to volatility. The market is the ocean. Waves are normal. You cannot ban waves. You learn to swim, you learn to read the weather, you use a life jacket, you choose the right boat. That is why a steady plan beats emotion. For many everyday people with jobs, families, and bills, the most practical approach is DCA, buying a small amount consistently over time, combined with sensible portfolio sizing. This is not flashy, but it is how disciplined crypto investment is actually done. And if we are serious about wealth that lasts, we must talk about security. There is a famous saying in crypto, not your keys, not your coins. If you do not control your private keys, you do not truly control the asset. Treat this like your house keys. You would not hand them to a stranger and hope for the best. Use strong passwords, enable two-factor authentication, learn safe self-custody, and avoid suspicious links. A fortune that is not protected is not a fortune. It is a risk. Generational wealth is not only about accumulating money, it is about accumulating advantage, better options, better education, more time, more resilience, more freedom to choose. In that bigger picture, Bitcoin is not everything. It is a potential piece of a long-term strategy, a way to participate in a global asset class and to learn a deeper lesson about money, ownership, and personal responsibility. Now let us be honest about altcoins. Yes, some can deliver huge returns, and yes, they can also destroy portfolios. Not everyone needs them. If you explore them, treat them as the high-risk slice of your portfolio with clear limits and clear rules for taking profit. Do not call something long-term investing when it is really a short-term bet on a story. This is where many people confuse speculation with crypto investment, and the market corrects them. So, how do you begin? Starting today. 3 simple steps. 1. Learn the basics. What Bitcoin is, why scarcity matters, why security matters. 2. Set discipline. Start small. Stay consistent. Do not let headlines control you. 3. Protect yourself. 2. FA, safe custody, proper backups, and a plan for your family, so access is not lost when it matters most. If someone promises guaranteed returns, treat it like a siren. It sounds attractive and it leads to shipwreck. I will close with this. Generational wealth is a game of time. Big opportunities usually do not arrive when everyone is celebrating. They arrive when the crowd is quiet and distracted. You do not need to go all in to participate. You need to be smarter than yesterday, more disciplined than yesterday, and more patient than yesterday. If you want a compass in a noisy market, stay with the crypto compass. No fantasies, just a clear system, responsibility, and long-term thinking. That is how generational wealth begins.